Hey traders, this is Ron. Happy Sunday. Hope you guys are having a great weekend. As always, everything in this presentation is for educational purposes only. Daily chart of the S&P 500 is on our screen, the SPY, and this was the December low where the world was coming to an end a year ago. Back up, this is about where we are year over year. There was the crash and we go from 240 back up to 314. And this past week, they were trying to fearmonger everybody to death as if the world was going to end. But it's why I say just ignore the media. They all have their own little agenda. Here we closed on Friday up almost 1%, challenging the all-time highs on the daily chart. Walking into this week, the broad indexes, major index ETFs, they're all bullish. If we go to a weekly chart of the S&P 500 on a weekly basis, closing at fresh new all-time highs. Let's go back to a daily and check out the Qs. So QQQ, ticker symbol. We did gap up on Friday, finished higher by over 1%. We're getting close to the new all-time highs. Here is the Dow, the diamonds, up 1.2%, almost back to all-time highs. If the markets go to new all-time highs on a closing basis, regardless if there's a lot of volume or not, this is bullish and it re-energizes the bullish trend. Let's take a look at $VIX.X. The VIX is down from 16. It's now down to 13.62. VIX coming down, markets going up. They are trading in tandem. Here's XLF on a daily basis, fresh new all-time highs. So the banks apparently aren't worried at all. I think there's going to be a worry. The banks are in, that's a whole nother conversation. But the banks breaking out is also viewed as bullish for the broad market. Now, I had a question on gold and silver and when might be their time to shine. In these videos, I do have a bullish opinion of gold. How high can it go? Now, what we're looking at on GLD here is 137 bucks for one share of GLD. I think gold on the GC contract, which is gold futures, we could go to 5,000 an ounce, 7, 8,000, maybe more, maybe 10, who knows? But that's when, quote, the end is near, so to speak, and there's just going to be a complete crash and everybody's thinking of the end. It doesn't mean gold can't have rallies in the interim. My tell for gold, and I get asked this a lot, what's the tell? I want to see a spike in volume and then a continuation. That's going to be a sign that gold's running on news that's actually bullish for gold. If you think back into May, when we had that bullish move, gold typically doesn't rise over the summer. Usually the summer peaks or by fall it's peaking, but there was a really nice tradable run here. Volume began to spike. We're up around 125, just ballparking it. And then we pretty much went in a straight line. There was one little close below the red line, which is the 20-day EMA here. What was that? The end of July on the 30th, 31st. And there was a bullish engulfing and we had another run before we started getting below moving averages. So the high did come in September, which is the fall period. So from a seasonal perspective, it played out. But this kind of rally is a little unusual. But it didn't rally on the news that would typically send gold through the stratosphere. It rallied because, yeah, there was some negative headlines, but there's always negative headlines anymore about the market and whether it's the president, etc. So what I'm looking for is a breakout on gold, big volume, day after day after day, but on news that could actually be bullish for gold. So when I see that happen, because there's so many different things that could cause it, I'll let you know, just from my opinion standpoint. But that's what I'm looking for, and it's just not here yet. So as gold continues to move lower on the daily chart, we do have basically a channel in here. Typically, gold goes seasonally bullish the end of December into the beginning of January. We'll see if that plays out. It's been 7 for 7 in past years. It's something that we talk about a lot at Financial with the seasonality there. But you have to be careful if you're a gold bull. It's easy to get sucked in and just always thinking it has to go up because there's all these bad reasons. We're just not there yet, and you could disagree with that. Gold's not responding, and price wins, and price is not moving higher. If we take a look at silver, SLV, it was down over 2% on Friday, new near-term lows. This really isn't much support. It's probably down near 1350, 14 is the next support zone. If we go back to gold miners, they're still trending lower. They did try to break out this past week, and now they're rolling over. Gold just isn't there yet. When it makes that change, I will definitely highlight it. So that's my thoughts on gold. And to me, bullish, bearish, price action rules, and we're just not seeing it yet. Check out Royal Gold. This is an individual miner, ticker symbol RGLD. Now this one had an amazing move. Look at RGLD when it started to break higher back in May when gold itself started to run. Here it went from around 90, volume began to pick up, straight line. You want to talk about almost having to do nothing and set it on autopilot. Holy cow, from 90 to 135, then it finally starts breaking down into 125 come September. Well, once we stayed above these moving averages and then we lost it, look what it can't do. It couldn't get above the 20-day here, couldn't get above the 50-day there, couldn't get above the 50-day last week, and now we're rolling over a higher volume. If it breaks, if you're trading RGLD, I would set an alert for around 109. We close below 109, the next support level, all the way back down here. That's a long ways off. That could be a potential bearish directional trade, of course, in a paper trading account. From a bear call perspective, what's interesting, maybe something just for a couple weeks, something above maybe 120 could be a potential trade idea there. I had a question on Apple, and Apple's been going back and forth the last couple days or last week or two. I would say this, once Apple took out the previous high in August, it consolidated, it then broke out, and earnings kept it going. We then consolidated again. On Friday, the stock is broken out to new all-time highs. This is a breakout. This is re-energizing the bullish trend. Because Apple's breaking out, that's probably, in my opinion, also very good for the market. How goes Apple is going the market right now. A strong Apple is going to be good for the broad market too. In the meantime, if Apple's up 5, 10, 20 bucks every 2 or 3 days, would I be worried? The answer is no. I just think people are buying and selling just based on, hey, they maybe had some short-term gains. So it's not uncommon when a stock starts exploding, you get some chop for a while. But then when you digest that overbought condition, which would have happened here in November and December, almost a month of consolidating, and now you break out, that's really bullish technically. ULTA was the biggest gainer on Friday. Why I'm bringing this one in is we talked about it when the gap down occurred, almost from 340 down to 240. Again, the value of protected puts. It tried to break out here, and then it rolled over, consolidated. Now we had a pop here. If I zoom in closer on ULTA, when we can get above that closing price, which is 265.99, so let's say 266, it's about $4 higher. We get above there on a closing basis, that's when the gap fill becomes the target. Until then, ULTA is actually still in a sideways range. So we need 266 on a closing basis. And then here is Ballcorp, BALL. This stock going the other direction. Sort of like RGLD, that gold stock we looked at. When this thing began its run, just look at the moving averages. Test, test, break, but hold the 50-day in orange. Here, hold the 50-day in orange. Remember, the orange is the institutional moving average. We held it here. We break the red, but got right back above. But look what happened here. Once we finally broke that orange line, the 50-day SMA, which acted as support just the day before, look what we cannot get over. Resistance, 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 fall. Now we can't even get above the 20-day, and now we're breaking down. And for those of you guys that like to, if you like, I like reading charts. I think it's fun because I think the candles can really tell us a lot about what's going on. But when you violate previous buying levels, when those levels, what were once defended, are not defended, and we break below them, the folks that were defending those levels, their stops could be just underneath there. And then their stops get triggered, hit, and then all of a sudden it adds more selling pressure. And I think that's what happened right here. What is that candle right there? 1031 Halloween, closed at 69.97. Look what happened. $2, $2, $3. This stock went from 70 to 65, $5 in 3 days, as we violated those previous buy points. Now look what's happened. Sideways, sideways, sideways. We also had bearish engulfing on Friday over Thursday. We've now closed below here. You know, past performance is no guarantee of future performance, but we've already seen what can happen here. Can the same thing play out? Maybe so. Spike in volume before we close below previous lows. There's not a whole lot of stopping points on this. I mean, maybe 60 is a target, about 5% lower, but the real support could maybe be all the way down here. Anyway, BLL is really interesting because it cannot get above moving averages, and now we just keep breaking down to the downside. So that is it. Bulls have the edge walking into this week. I'll be really curious to see if we close at new fresh highs. If Apple is the tell, it's looking good going into Monday. I wish you guys a wonderful holiday season. Happy Hanukkah, Happy Kwanzaa, Merry Christmas, Happy New Year, and everything else in between. I'll see you in the next video. Take good care.